Welcome back. I hope you're having a good day. This last week, I came across an interesting Kiplinger column entitled 6 Questions to Ask Before Getting a Reverse Mortgage. And here are some excerpts from the column, which was generally fair-minded. It says, while saving for retirement is a major financial goal for most, not everyone is saving or able to save enough money so they can live on their retirement funds by the time they quit working. And that leaves them wondering just how they're going to manage to pay for living expenses or unexpected costs that may come up. A reverse mortgage is one solution to the problem. Instead of making mortgage payments to the lender, of course, a homeowner with a reverse can relinquish their home's equity or a portion of it back to the lender in exchange for payments, says the columnist, and they can use that to help cover their expenses. Now, that may be a tempting proposition if you're worried about just how you're going to cover your cost in retirement, but it is not the only solution, true enough, for supplementing your income. And it may not be right for everyone, I would agree. So how can you know if it's right for you? Well, here are 6 financial experts from Kiplinger's Advisor Collective, and they shed some light on the pros and cons of a reverse and offer up some critical questions you should consider before you decide whether you're going to take up a reverse mortgage. And the first is, what are the viable alternatives to a reverse? And a reverse mortgage is just one of many ways that one can use to help create cash flow in retirement or solve that cash flow crunch. It may not be a good fit for one, though. Instead of getting trapped into evaluating the viability of a reverse mortgage only, you should challenge yourself and your financial advisor to uncover other potential solutions to analyze and consider. And then from there, you can review the pros and cons of each option and make an educated and informed decision, which best matches your needs and goals, says Taylor Schulte, Define Financial. The next question is, can I afford the high fees associated with a reverse mortgage? And will my family potentially lose the house upon my death if they need it? And the answer to the first question, they say, is no, and the answer to the second is yes, but be very careful before you go down this path. Reverse mortgages can tempt one with the upfront payments that you'll ultimately have to pay back, said Andrew Schrage, Money Crashers LLC. The next question is this the right house for aging in place? Very important. Everyone wants to age in place, but before determining if a reverse is the appropriate option, it's important to think about whether this is the right house for aging in place. A reverse mortgage or a home equity conversion mortgage can help individuals or couples use their home to stay home and have the funds to do so, but it's important to consider other factors such as maintenance and upkeep, says Margarita Chang, Blue Ocean Global Wealth. I would completely agree. Do I need help in paying for long-term care and other expenses is the next question. Do I have the assets during retirement to help pay for expenses such as long-term or medical care? And if someone answers no to that question, then that tells me that the person does not feel secure about their resources and being able to absorb those significant expenses in the future. In most cases where someone does not have sufficient assets, the best solution could be using the equity in their home through a reverse mortgage, writes Mario Hernandez, Longevity Wealth Management. And another question is, do I want my house to go to my kids or grandkids? We should always be asking this as reverse mortgage pros. One important question to ask yourself is, how important is that you pass on your home to your kids or heirs? If you want to keep them, or if you want them to keep the house, then be very careful as to accurately assess just how much of the equity the reverse mortgage will consume over time, and then include the interest expense in that calculation. Establish a maximum and don't borrow beyond that point, says Greg Wellborn of First Financial Consulting. And the last question is, can I actually explain what a reverse mortgage is? For the common person, that's going to be a challenge. One great question to ask yourself to determine if a reverse is right for you is if you can actually explain what a reverse mortgage is to someone else who doesn't know and actually have it make sense to them. Now, if you can't do that, well, it may not be the right loan for you. You need to fully understand it before knowing if it's right for you or not, said Bob Tredothorn of Wealth Planning by Bob Tredothorn of Simplified Wealth Management. So this column, I'll leave a link here in the show notes here on HECMWorld for those of you that are watching if you want to read it in its entirety, but I felt it asked some very important questions that should be addressed by a financial professional or someone who is considering a reverse mortgage before they decide to go down that path. And yet we have another potentially misleading reverse mortgage foreclosure story. This one comes from the Atlantic Black Star Journal. It says a Florida nonprofit firm is announcing it's helping an 80-year-old civil rights activist who is now at risk of losing his longtime home. Arthur Johnson, 80, owns an aluminum-sided two-bedroom home in Riverside, a neighborhood in Jacksonville, and he has long ties to the area that stem from his early childhood. But today, his home, which he purchased in 1986, is in jeopardy because of his financial struggles. Jacksonville Area Legal Aid, or JALA, said in a news release that Johnson has not been able to work while dealing with his prostate cancer and other health issues. We do wish him well. Johnson's troubles actually began, they say, when he took out a reverse mortgage loan, accepting $24,000. However, he landed in some hot water because he was only getting about $941 in monthly Social Security payments at the time and was struggling to keep his home up to code and make repairs. Unable to get insurance, he defaulted on his reverse mortgage. After fighting to hold on to his home for 12 years, he ended up owing a total of $140,000 to pay off the mortgage, says the column. And according to the law firm, reverse mortgages can be risky due to the potential changes to the loan requirements. Well, once the loan is signed, there's no change in the requirements. They also add that black people and other minorities are most vulnerable. The amount of black individuals that have lost their property is incredible, said Johnson. It's a good program, but you have to stay on top of your responsibility to pay your taxes and insurance. And as you get older, you're not going to be able to keep up with that. Well, part of that is true. You have to keep up on your property taxes and insurance, but the story is falling short in one way. If you are a casual reader, you're going to come across the headline and see that the reverse mortgage is what put him at risk. And so they are really not giving us just part of the story, but it can be misleading. Now, according to the news release, the law firm is optimistic that if everything works out, they could temporarily save his property. But this column, like most covering similar stories, they bury the lead, the most noteworthy fact about required insurance for mortgage holders of all types, and it risks misleading their readers. Any mortgage, traditional or reverse, of course, requires continuous homeowners insurance coverage, lest the homeowner risk being foreclosed upon. And while Johnson's story is certainly unsettling and tragic, it's not unique to reverse mortgages. Each day, Americans that have a 30-year fixed-rate mortgage or any other type of traditional mortgage loan who do let their coverage lapse face a similar dilemma. What's also not mentioned in the column is beginning in March 2015, FHA, as we know, began to require a financial assessment of all homeowners that are applying for a federally insured home equity conversion mortgage, or HECM. Of course, that's the most popular reverse mortgage program to you, our mortgage pros watching today. The assessment measures an applicant's financial capacity and willingness to meet their financial obligations and property charges and credit obligations to help mitigate the risk of a technical default for lapsed property taxes or insurance in the future. Those that are deemed at risk of future non-payment are required to have a lifetime expectancy set-aside, or LESA, which places projected future premiums and tax installments in a separate account based on the homeowner's life expectancy. And for reverse mortgage professionals, it should be noted that is not guaranteed for life. It's just projected on expectancy. Incomplete reporting of the relevant facts of reverse mortgages can unwittingly harm older homeowners who would have substantially benefited and improved their quality of life, but avoided the loan because of columns like this. And while I empathize with Mr. Johnson's predicament and pray for a solution to be found, we have to have columnists do a little bit more research, because most likely he got the loan before the financial assessment, but much has changed likely since that time. For those of you familiar with our podcast, you know that we bring you not only reverse mortgage related news, but news related to the mortgage industry as a whole, because it does have an impact on the entire economy and mortgage borrowers across the nation. Well, recently we learned that the nation's largest mortgage lender is shuttering their mortgage origination platform, at least one. National Mortgage News reports that Rocket companies will soon be shutting down Rocket Pro Originate, That's a mortgage origination platform for real estate agents, insurance agents, tax professionals, and other financial professionals who are also licensed to originate mortgages. I was unfamiliar with this program. Now, that platform, which thrived during the refi boom, will cease operations this summer. Rocket Pro Originate is no longer needed based on the volume of business that exists in today's market. It'll be phased out by the end of June. Now, the affected originators, including real estate agents, insurance agents, and among others, must submit new mortgage applications no later than March 29th of this year, with loans in progress required to close by June 28th. The email notification informed those affected that while their licenses would not be revoked, Rocket would be discontinuing sponsorship, and that would require them to seek an alternative sponsorship so they can continue their mortgage origination activities. It was not immediately clear just how many originators will be impacted by Rocket Mortgage shuttering their Rocket Pro Originate platform. In a statement to Housing Wire, a Rocket spokesperson said the company will be focusing their efforts in the third-party origination channel on mortgage brokers, which already make up the bulk of their business in the TPO channel, saying, "As we continue to evaluate our business and more precisely focus on the areas of growth for Rocket Mortgage, we made the decision to wind down our relationships with insurance agents, financial advisors, tax professionals, and real estate agents who have been originating mortgages on our behalf," in the platform, said a spokesperson. Thank you for joining us for another episode of HECMWorld Weekly, the nation's only weekly podcast bringing you reverse mortgage-related news for you, the mortgage professional. We do have an audio companion of this podcast, which you can find on Apple Music, Spotify, Podbean.com, and on HECMWorld.com, where you're going to find our weekly videos, our articles, and commentary, so be sure to go there if you have not done so already. Thank you for joining us, and be sure to return next week for more reverse mortgage news on the go.